In this video, we're going to look at which chart time frame should a beginner use. Stay tuned. Hey traders, a very warm welcome to you. Okay, so you are brand new to trading. You just come in, you've got your broker account set up, you're looking at your charts, you're about to place your first trade, or you've placed some trades, you kind of don't really know what you're doing, you've had a little bit of fun, you've placed a few trades, maybe won a bit, lost a bit, but you kind of want to get some focus now, thinking, all right, what exactly do I need to be looking at? I've got a massive amount of charts here, massive amount of markets, massive amount of time frames. What do I do? And that's what I'll focus on now in this video. What time frame should I be looking at as a beginner trader? So assume you've got your market set down, assume a few things, other stuff sorted out. I'm looking at my charts, I'm going, you know what? Do I trade a daily? Do I trade an hourly? 1 minute, one tick? What do I trade? Okay, first thing you've got to do is say to yourself, okay, in fact, I've gone in the wrong order here, but let's go to this one. What type of experience do you have? Because generally speaking, if you're asking yourself that question, you probably don't have a lot of experience in the markets, because if you did, you would say, okay, well, actually, I'm more of a scalper. I'm more of a swing trader. I'm more of this, I'm more of that. And you've kind of starting to carve your path. Not necessarily you'll stay on that path forever. Loads of people will divert off and do different things, but you will have a kind of plan of action for you. So assuming you're a beginner trader and you're just getting started, you kind of, I don't really know what to do. You need to think to yourself, what type of trader are you? And maybe I've rephrased this wrong. If we look at a beginner trader, what type of trader do you want to be? You've got to use your gut at the start of it. You might be wrong and we might switch on this. But you've got to say to yourself, you know what, I think I'm a really good scalper. I'm really good at sitting there making those quick decisions in, out all day long. Or a day trader, scalping, that is kind of something very, very specialized these days. Maybe day trading in and out several times a day, not as active as a kind of scalper looking for a few ticks, but in and out maybe a couple of times a day looking for the big moves of the day, those big rotation plays across a couple of markets. Are you that kind of guy or girl? Are you someone who wants to analyze and put swing trades on for multiple months? Are you a mixture in between two? What's your gut feel on that? And we've done a video on this before. We talked about, how's it fitting with your time at the moment that you've got available, your lifestyle, all that kind of stuff. So you need to know, and that's going to have a big impact on how you make your trading decisions. Number two, how do you make your trading decisions? If you are a day trader, you don't really care what the daily does once you've done your kind of analysis. You look at a daily chart, you know where you are. You're going to go onto the lower time frames to make your decision, because your decision making process is quick. You've got 10, 15 minutes, couple of hours, your trade's done. Whereas if you're swing trading, you might not care about the 1 minute chart, for example. You don't really care what happens in the last 15 minutes on the window. You care about what's happened in the past few weeks. But whatever you're trading, I would always say, listen, start off on the daily. If you are a brand new trader and you don't know what you're doing yet, just look at the daily chart to start off with. In fact, you know what, do this. Start off with a daily, have a daily up there, have a medium time frame, I would say like an hourly. Some people say 4 hourly, but 4 hourly or an hourly, something like that. And then go with one lower time frame. So you could go with either a daily, an hourly, and a 5 minute. For example, you could be a daily, a 4 hourly, and a 15 minute, something like that, some kind of large, medium, small time frame. And then look at those and how they correlate. And in the day, guys, you're getting the very, very similar data. We get the same data, obviously, with a small time frame that's squashed up, but the same pattern is just going to be showing on different charts in a different way. So start off with your daily and say, hey, listen, where are we now? Write your notes down. We're in a trend. We're up near resistance. We're at new highs. We're at lows. We're in a range bound environment. We've been in a range bound for this long. We've been in a $10 range. Notes on that. Then you move down to your next time frame, your hourly, your 4 hourly, whatever it may be. And you say, okay, now I've got how much time I've got here? I've got like several months in this. What can I see? What's different? Actually, I've noticed now that there's a little trend within that range, because I've kind of spotted that, and the range is quite wide on a daily, and I can see a little trend here. All right, let me go to my really low time frame, or relatively low. What can I see in the past few days or a few weeks? Oh, interesting, I can see this, see that, okay. And you start to kind of look and see visually what each chart is telling you. Now, the higher the time frame, the more data you've got, but the less information you have about the shorter time period, if that makes sense. So you've got a daily chart showing you 5 years or whatever it may be, 1 year, 2 years, but it's not telling you the last week how price moved up and down. Yes, you've still got 5 candles as such, but you're not seeing what's happened inside those candles. So you've got to have some intraday candle. You've got to have something that shows you intraday. And to do that, you've got to crack under the daily into like the hourly, 15.5 or whatever. Now that comes down to personal choice then. How much data do you need? Do you need the whole week in which case a 5-minute chart's probably not going to fit on your screen. You probably have to go 15 hourly. Do you need more than that? And again, this can be variable depending on how you're trading. You could say, hey, listen, or how the market's trading, should I say, it's just gone crazy and recently, and all I really care about is the last 2 days. I might go 3-minute because I want to see the intricacies of each kind of swing high and low. And if I go further out than that, it's just going to be kind of trending environment. I don't need to go further out than that unless we break the prior day's low, for example. So without going too deep down this rabbit hole, you know, what chart time frame should I be going to use? Start the daily. Look at the daily and just start to see patterns on the daily. Just broad patterns. Am I trending, uptrending, downtrending, ranging, whatever it may be? Take a second time frame, hourly, 4 hourly, whatever kind of floats your boat, you put it up there, you think, I like the look of that. Again, same kind of structure. And third, go to the lower time frame. So rather than me saying, yes, you've got to use this, I would say, see how they all interrelate and how they all provide different information about the same instrument. Because one of the keys to kind of making good, successful trading decisions is being able to use multiple time frames when required, when needed, when you're in the right market environment to assist you with your decision. So if you can start that ball rolling early on and you can start to kind of see how they all interrelate, then you'll stand much more of a chance when you go, you know what, I don't need the hourly, I just want to focus on this one, or I don't need that, I just want to focus on this one. You can start to hone in your skill set, having experience in multiple range of time frames. All right, guys, that's what I've got for you today. Take care. See you next one. Goodbye.